What's going on, everybody? Liam O'Reilly, Vermont economic realtor with Jerry Riley Real Estate. I hope you're doing well. These higher mortgage rates are drastically changing the housing market, and we've entered a market that we haven't really seen in recent history. Not before the pandemic. It's different than it was during the pandemic. These higher mortgage rates, the low inventory is really causing a lot of confusion out there in the housing market. So what we're going to do in this video is take a look at the visual representations of what's going on using Redfin's charts to help you make the best decision for your home sale or home purchase. I'm also going to give my 2 cents of what I think the best thing you can do as a home buyer or seller in this market is. So let's get right into it. The first thing that we're taking a look at is this housing market update. A $3,000 budget has lost $71,000 in purchasing power since last year as mortgage rates hit a 20-year high. So what they're talking about is outlined in this chart, and I think this does a great job at illustrating what happens when mortgage rates rise. So if we take a look at this $3,000 payment, which is what they mentioned in their headline, at 5.5%, where things were last year, you could buy a home for around $500,000. Now, where rates sit now, according to their 7.4% mark that they mentioned in the headline, you can buy a home for $428,000. So roughly $71,000 less than you could on the exact same budget last year. And the only thing that's changed is the interest rates. And now this is based off of a 20-year or a 20% down mortgage with 1.25% property tax and a 0.5% homeowners insurance, as it says right here below the title. So this chart does a great job at depicting what is going on and how purchasers have lost their purchasing power over the past year. And now if we go back to a year before then, where rates were at around 3%, you can see how it decreased even further. You know, at 3% on a $3,000 monthly payment, you could buy a $621,000 property. So over the past 2 years, that same borrower, the same person with the exact same income, has lost $200,000 in purchasing power because of these increased rates. And so a lot of people out there in the market and a lot of people predicting about how this would affect the market thought that we'd see prices come down as affordability decreases, right? As things get less affordable, home prices should come down. But inventory is still very tight, which is keeping the median sales price at a stickier level than what a lot of people were predicting. And if we take a look at some of these firsthand accounts of what's going on in the market right here, look at this agent out of Tennessee. Some buyers are hoping they can get a home for under asking price to make up for the high interest rates because they're hearing the housing market is slow. But what's happening nationally isn't necessarily true here, right? We talk about this all the time, how there is no national housing market. And I think here in Vermont, it's very similar. It's very different than some of these other national trends that are going on. So what do they say about Tennessee? Tennessee is a hot spot for people relocating from other states. There are plenty of jobs, and the area is starving for inventory. So despite high rates, there are more house hunters than there are houses for sale. Homes that are priced competitively and are in good condition are typically selling at or just above asking price with 2 or 3 offers. Now, here in Vermont, I think it's even more extreme than that. Homes that are in good condition and are competitively priced are selling for well over asking price in a lot of cases. I just submitted an offer on a home for some buyers of mine at $800,000, so not even a entry-level price point. $800,000 property that ended up selling, I don't know the exact price, but the listing agent told me the sellers accepted an offer that had a 9 in front of it, so something in the 900,000s. So my guess is it was a cash offer, but who knows? But really the point is that depending on what type of home you're looking at and what you're purchasing, you might find yourself in this competitive market situation. But as I mentioned at the beginning of this video, things have changed drastically from a year ago, from 2 years ago, where 2 years ago it was submit your highest and best price no matter what, waive all contingencies. There's going to be 13 offers, and you're going to be battling just to get your offer looked at the property. Now things are a little bit different. You can't just say that for every single property. You really have to take each property as it comes in, take a look at the condition, take a look at the price point, and try to understand, okay, is this a home that's going to be very competitive? Am I going to have to go all out to get this home? Because you might. Or is this a home that needs a little bit of work, that might be a little bit overpriced, and I can wait a week, wait 2 weeks, see if they're going to come down in price, or throw out an offer under list price and see if the seller is willing to play ball. It's really not as simple as we're throwing out an offer under list price because everything's selling for less than list price, or we're going crazy because that's what everyone's doing in this market. And it really all has to come down, it all comes down to these higher interest rates. The fact that affordability is so low right now has removed a lot of buyers from the market, which has made things tricky in a number of ways. One, if you're a buyer out there, it's probably harder for you to purchase the property if you are getting a loan. And so you might think that a lot of buyers are experiencing this. I should be able to ask for money off of the purchase price so I can afford this property because the seller doesn't have the amount of interest that they did a year ago or 2 years ago. And that's true in some cases, but it's not true in all cases. Let's take a look at a couple more charts and try to understand what's going on. So if we go over to the weekly update from a week ago, we take a look at these home buyer payments. So the average payment, this is what your mortgage payment would be on the median sales price. And this is at a 6.9% interest rate. So it's even higher now. But the median sales price, this is what your housing payment would be if you put 20% down. So it was at $2,600 as of August 6th. And if we look all the way down, that gray line at the bottom of your screen there is the 2020 data. And so the median sales price in 2020 for the average home buyer putting 20% down would be under $1,500 a month. You know, that's a pretty drastic difference in the home buyer payment. So obviously that's causing a lot of buyers to move out of the market and making things a little bit less competitive than they were. But at the same time, we have inventory. New listings are down 16% year over year. Active listings are down almost 18% year over year. So there's a lot less homes for sale. There's a lot less new listings coming to the market, which means that although there's less buyers in the market, there are still more buyers than there are sellers. So as we look at this data and we try to interpret what's going on, and if you're out there buying or selling a home in the market right now, I'm sure there's a lot of confusion about what should you do in this market. Should you offer over list price? If you're a seller, am I going to get multiple offers on the home? And there's a lot less certainty with how to buy or sell a property right now. So really what I think the best thing that you can do as a home buyer or home seller in this market is to try to give yourself as many options as possible. Try to give yourself as much time as possible. If you're a home buyer out there and you have a lease that expires in 2 months and you need to find a place to live, otherwise, you're not going to have anywhere to go, that is not the best position to be in. You are going to be, forced to potentially make a concession that you don't want to make because there's low inventory right now. You won't be able to wait for the right property to hit the market that you can purchase, regardless of the situation, whether it's in a multiple offer situation or it's under asking, depending on your situation. When you put yourself in a time constraint and force yourself to make these decisions, you put yourself in a tough situation, or you could put yourself in a tough situation. Now, on the same side, if you're a seller right now and you need to get rid of a property because you're moving or you might be moving for a job or something along those lines, what you want to do is you want to give yourself the most amount of time, give yourself the most flexibility. And then that way, if you list your home too high or you mistime the market, things don't quite work out, you aren't forced to cut your price right away and take an offer under what you are normally comfortable with. So really that's what I think it all comes down to, is you want to give yourself the most flexibility in this market. There's not that much inventory and there's less buyers than there were before. Things are less certain than they were a few years ago. And so because of that, the more flexibility that you have on either the buy side or the sell side will pay off more than it did a few years ago. So that's really the main point of this video, is that I think as a home buyer or seller, flexibility is key and will help you find success in this market. Anyway, Liam O'Reilly, Vermont Economic Realtor. I would love to know what you think. Feel free to leave a comment in the description and let me know your thoughts. Other than that, all of my contact information is in the description. If you're looking to buy or sell a home here in Vermont, I would be happy to help you directly. If you're looking in another state, reach out. I will find a great agent who knows their market, knows how to navigate this for you, and will help you either buy or sell your home in that state. Other than that, I will see you folks in the next video.